Hello everyone, good morning. Thanks very much for attending our panel, which is entitled The Case for Greek Equities. We are going to be speaking for around 40 minutes, and I have some very distinguished speakers together with me who are going to actually, hopefully, give you a very good idea about what is the Greek equity story right now and what it is expected to be in the next financial year. To lay the ground a bit, I think you'll most certainly will listen to the optimism, to certain particulars around the optimism that the Greek economic transformation has actually created, and that's indeed something that will be memorable in economic history, how Greece was able to turn around the situation in the past 6 years. Two comments on my side, and then I'm going to go to the speakers. First of all, from a macroeconomic perspective, I think it's important to also add some quantitative, understanding of where we are and what is the broader picture. First of all, you have Greece as a national economy, very consistent GDP growth, which is expected to last also for the next financial year. That is extremely important for international investors, as I'm sure you know. Upgrades in the country's credit rating, which has actually more or less turned, amongst other, the Athens Stock Exchange to be included in the developed markets, and I think that's something we're going to discuss down the line. A very successful year also for the Athens Stock Exchange, with a number of significant IPOs and increase in trading by international investors, significant increase in trading. And also we see a remarkable increase in M&A activity, private equity investment, specifically in certain industries like the energy, the infrastructure, renewables, and obviously technology. So that's the big picture. The narrower picture with regard to trading, which is very indicative also of how important and significant is the interest of international investors around Greece these days, and allow me to consult my notes, is that foreign ownership reached a record high of 71% of total market capitalization in 2025. This was around 85.4 billion, big number. Average daily trading value over 200 million, first time after 2009. We topped at almost 209 million. And obviously foreign participation in turnover climbed to 62.7% in 2025 from 50.8% in 2020. So that's a significant increase as well. So with this in mind, those two, let's say, broader and narrower pictures of the situation, we're going to be having that conversation with our distinguished speakers. I would actually encourage every speaker to say a few things about themselves. I'm going to introduce them very, very briefly with their title, and then we can actually commence the first round of questions. So, dear speakers, you want to say a few things about yourself, like starting from the left?
Okay. I'm Konstantinos Nikas. I'm the General Manager of NBG Securities. NBG Securities is the brokerage arm of National Bank of Greece.
Very good. Thank you.
Hello everyone, my name is Joti Rana. I'm the Head of Policy and Governance at FTSE Russel. My role is to support the index methodology and country classification process across our indices.
Good morning everybody, my name is George Kallimasias. I'm the Chief Strategy Officer for Athens International Airport, a company that was listed very recently, just 2 years ago. And as of the 1st of February, I will assume the role of the Managing Director of the company.
Good morning, my name is Giannis Vrentzos. I'm the Chief Executive Officer of Alter Ego Media, the largest media and entertainment group in Greece, that we made our IPO in January 2025.
Thank you very much, Gianni. And actually, I'm going to start from you, since you did mention that you held a very, very successful IPO in 2025. And I'd like you to draw that broader equity story for Greece, based on your experience from your IPO. What do you see? Where do you think we are, and where do you think we are going in the next financial year?
So, certainly, Greek market have experienced very significant growth in the recent years. But what we have seen is that over the last years, the investor attention have been concentrated mainly on the banking sector and a small number of very large caps. I think it was relatively straightforward to achieve a return during the market. The growth was based mainly on the improvement of the Greek macroeconomics and the initial relative low valuations. This is not the case anymore. Of course, the significant growth does not mean that there are no business opportunities and investment opportunities anymore, far from that. I think that from now on, the equity story is not built based exclusively on value. It has to do more on the specific qualities and characteristics of the specific corporates. I think we are seeing a number of Greek companies in the Greek stock exchange that have very clear strategies, corporate strategies. They have been strengthened during the crisis. They have solid fundamentals, and we are seeing also an increased outward orientation. I think also it's very important to mention that Greek economy is at a totally different stage of development in a number of industries. The prospect of growth of the Greek markets, I think, is higher, especially because of this lost decade. And these greater market prospects probably create more growth opportunities for the Greek companies. Is the natural catch-up effect that we're expecting to happen in a number of sectors, but also it's very important to mention that there are tremendous consolidation opportunities across the most of the industry. Still in the majority of the industries in Greece, and certainly in our sector, the media and entertainment sector, there is a huge fragmentation. So what we are seeing is that the Greek stock market is transitioned from a pure value play to a growth and quality play for specific companies.
That's very important. I keep two things from what you said, Gianni. Obviously, the comparison between value and better understanding of what the company stands for, which is something very important, in my opinion, does indeed create lots of opportunities, as opposed to, let's say, previous stage of the Athens Stock Exchange in particular. So that's very important. Investors become more and more sophisticated. And at the same time, what you mentioned about consolidation opportunities, that's very important because that's an indication that we are going to be witnessing an increase in deals going forward, which is a very good sign for the Greek economy and particularly for the Greek equity markets. I'm going to now go to Mr. Joti Rana, and I'd like you to, if possible, provide us a sort of brief overview of the FTSE equity country classification process. And the reason, obviously, I'm asking that is because I'd like you later on to let us know how did you implement that methodology in actually upgrading Greece. So.
Yep, thank you. Yep. So our country classification scheme basically was launched in 2004. At that time, it was the first country classification scheme that looked to provide transparent and codified rules on how markets should be classified. Historically, markets were classified based on their wealth or credit risk. However, since our introduction of our scheme, which is basically focused on how foreign institutional investors are treated, how they can invest in the market, that has now been adopted as the norm. So maybe if I can talk a bit more about what our scheme looks for. So initially, we're focusing on how foreign institutional investors, FIIs, can easily open up accounts in that market. So in Greece, how easy is it to open up trading accounts? Are there any restrictions to that process? Secondly, are there any controls in place that will stop inflow of capital into that market. Again, there aren't any in Greece. Once that capital is in the market, is it safe? So are foreign institutional investors, do they have the same rights as domestic investors? Can they vote by proxy? Or do they have to attend themselves for meetings? So proxy voting is important. And also, are there funds safe in that market? Are there any kind of, large taxes or any kind of fees? And when they're trading an equity market, are those costs of trading that equity market competitive compared to their peers? And then finally, can investors get their money out of the market if they want to? Are there any controls? Are there any high taxes or controls in place that will stop them doing that? So that's an overarching kind of view of our scheme. What we also do is that we look at that on a regular basis as well to ensure that it kind of reflects best market practice and evolves as equity markets evolve as well. One other point I'd like to touch on is that we also look at minimum size and stock count requirement. So there are a number of frontier markets in Eastern Europe that technically have the best trading systems, have everything in place technically. However, they don't have any large enough securities that will be eligible for an index. So hence they are frontier markets. So to be eligible for an emerging or developed market, you have to meet a certain level of size and certain level of number of stocks as well. So that's important. That process is run twice a year. And obviously Greece meets that in terms of emerging and developed. As part of our country classification process, we monitor 80 markets, including Greece. So obviously, as a data provider, we are not a foreign institutional investor. We do not know how a market operates in practice. So we're supported in our country classification process by an advisory committee that are made up of senior market practitioners from our clients, the likes of BlackRock, Vanguard, etc., who have expertise in brokerage services, custody services, and portfolio management. So when we're engaging with a market can say to us, look, we have short selling, we have stock lending, we have this, we have that. Why aren't we an emerging market? Why aren't we a developed market? So we will speak to our advisory committee and say, well, yes, they have the legislation for stock lending and short selling, but the stock lending facility is only there to avoid failed trades. It's not liquid enough. Not all the stocks are available for short selling. So we provide that feedback back to the market to say, look, this is what the users are seeing, and this is what you need to address to get a reclassification. So that's a very brief overview of the process that we have in place. And then my second question I can address later on, unless you want me to do it now.
Absolutely. No, we can do that later, but I think that's, I'm very tempted to ask a number of questions around costs, obviously, which is a very important factor in this kind of evaluations, and obviously also about the independence of the committees that actually do work towards providing you the required feedback to actually proceed with the evaluation, but that can be part of the next part of your speech today. Mr. Nikas, coming from the Greek banking sector, I think we'd like you to give us an analysis of the current and, let's say, midterm outlook of the Greek stock market, and then maybe you would be kind enough to give us some indicators about what is expected to happen shortly in the next financial year and maybe more midterm, as I said before. Thank you.
Sure. Let me take a structured view, because the Greek equity story is fundamentally different from what it used to be a few years ago. The market has delivered strong multi-year performance, but more importantly, this performance is rooted in fundamental changes in the economy and the valuation characteristics of the market. Starting with the macro side, we can say that the Greek economy has shifted from chronic instability to a position of sustained resilience. For several years now, the GDP growth has outpaced the Eurozone average. Labor market conditions are strong, employment is improving, disposable income has gone up, supported by wage growth and tax reforms, and public investment remains at some of the highest level in Europe, due to the RRF flows, and of course we have a robust pipeline of private investment projects. Fiscal performance is also a key differentiator. Greece is running consecutive primary surpluses, and the debt-to-GDP ratio has been declining at a faster pace among the European countries, at a level that now this has translated to a steady tightening of sovereign spreads. Inflation is also stabilized, so overall we can argue that the macro environment provides a predictable backdrop for corporate planning and stability. The earnings story is equally important. Across key sectors, such as banks, industrials, utilities, we see resilient profitability. Banks in particular have undergone a profound transformation. Asset quality continues to improve. NPL ratios have now converged with euro area averages. Liquidity buffers are very strong. Capital adequacy is well above regulatory requirements. Stress test results, which I remember once were a hurdle, now confirm that the Greek banking sector can absorb even severe shocks. And at the same time, the non-financials are exhibiting, again, resilient profitability. Despite the strong rally of recent years, Greek equities still trade at a significant discount relative to European peers. This is visible across multiple metrics. 2026 EV over EBITDA trades at almost 50% discount compared to MSCI World. The same stands for price to earnings ratio, while dividend yield is more than double that of the MSCI. Actually, the Greek market consistently offers one of the highest dividend yields across Europe. And even if we look at a broader indicator, broader market indicator index, such as the Buffett index, Greece remains well below developed market levels. It's half that of France, supporting the case for continued re-rating as fundamentals strengthen. Again, we discussed a bit on average daily trading volumes. These, in the last couple of years, have doubled. We've seen significant inflows after the country regained the investment grade. Sure, market concentration remains high, but foreign investors now account close to 70% of the market, and this is a strong vote of confidence. There are risks, but I would say that these are mostly exogenous. I would say geopolitical tensions, global trade deceleration, and external financial conditions, but the overall risk profile is materially improved compared with past cycles. So stepping back, I would say that Greece combines robust fundamentals, strong and improving corporate earnings, attractive valuations, improving liquidity, and following Euronext acquisition of Athens, a structural path for further convergence with developed markets. And bearing a major external shock, the Greek economy, I think, is well positioned to sustain its momentum and continue to offer compelling risk-adjusted returns.
Thank you very much. I think the comment about the restructuring of the Greek banking sector and the importance that this has for your analysis and for the broader outlook of the Greek economy is a fundamental one. You see that banks account for 60% of the trading, even still today, and that's a significant number. So everything starts and hopefully not ends there, but certainly starts there. Mr. Kallimasias, that's your turn, and since Mr. Nikas briefly touched upon the Athens Stock Exchange, I think that your story, the story of the Athens International Airport IPO, was certainly a very successful one. Nobody can doubt that. Also, your figures seem quite good the past couple of years, which is an impressive move. I'd like you to share with us some probably insights or lessons learned from your IPO, and maybe how do you think these lessons can be actually, how do you think other companies considering IPOs can benefit from such lessons that you guys learned?
Thank you. The Athens IPO took place as part of the Greek government's privatization program, HRADF, which had 30% stake at the airport company. Following the pandemic, where the trade sale process was suspended, of course, the government decided to proceed with an IPO. In that sense, they gave the opportunity of the equity investors to participate in the success story of the Greek economy, but also the success story of Greek tourism. And indeed, we saw that there was a lot of positive interest from the investor community to participate through AYA in this success story. Now, as part of the process, which was, I have to say, a rather complex one, since there were a number of stakeholders involved, the selling side, the other shareholders at that time, so there was a rather long process of developing especially the post-IPO governance of the company, and then proceeding with the actual IPO process, which took place in a rather short period with the engagement of more than 250 investors through meetings and roadshows. I think the most important part of our undertaking was to develop a clear and consistent equity story to the equity investors. AYA is a concession company which runs under a specific regulation which is rather unique for the airport infrastructure industry, with significant downside protections, with significant, I would say, it's a rather investor-friendly, but at the same time we had the obligation to make it very clear to the shareholders what the expectations were. And I think the most important part of this journey was that the equity story that we developed had to be clear for the IPO process, but also have the consistency and continuity for the post-IPO life of the company, because obviously a number of third parties are involved in this process, which after the success of the IPO, they continue their course, but the company will have the obligation to continue the journey into the investors' world. And so I think that we have successfully done that. We have successfully developed this equity story of a resilient, efficient, profitable airport operator, indicating where are the levers of growth for the future and what the limitations and upsides are. So I think the most important lesson is this development of equity story that will last after the IPO as well.
Right. I think your comment on the story not ending in a successful IPO is really spot on, because that's what actually makes successful management the ability to realize that they need to continue with the same pace and even grow further and be able to grow that equity story and attract even more investors. I think that's extremely important. And actually that brings me to Mr. Vrentzos again, because obviously, as I mentioned, you did a very successful IPO as well. And talking about the future, I think that's very important. What are the next steps for Alter Ego Media? What are you planning on doing? What is the next day? And how can you leverage on the key takeaways from the successful IPO to build the future?
First of all, in commenting on what George says, for me there are two key important issues that have to do with in an IPO. First of all, we need a very clear investment story and a clear strategy. And second is very, very important, the corporate governance issue. And under the corporate governance issue, for me, the main thing is that running a private company is totally different than running a private company. There is an enhanced responsibility of the management towards the minority shareholders. And one key theme of the number of successful IPOs that we have had in the last couple of years in the Athens Stock Exchange had to do with the clear relationship and support between the main shareholders and the companies. We see that in Optima Bank case, we see that in Alter Ego Media, we see that with the Athens International Airport. Now about the future, media and entertainment sector is totally transforming. You see what's happening abroad, the consolidation pace is unbelievable inside the industries, but most importantly, the technology evolvements start to change and remove in a certain degree the boundaries between the sectors. We are seeing that the business models between sectors like media, entertainment, content, technology, retails start to become very similar and overlapping between these sectors. We believe that our business model is aligned to this global trend of convergence between technology, media, and entertainment. What we have achieved through IPO, now there is a clear corporate strategy. There is a discipline that is dictated and is enhanced by the IPO. In less than 1 year, we have deployed successfully 70% of the capital that we raised in selective acquisition and investment in technology, content, and new business verticals. We are stick on our corporate strategy in a disciplined way, and at the same time, we have a very conservative capital structure that is very important in our sector in order managing effectively the business cycle. What we believe is that Alter Ego Media is a very good example of this new narrative of the Greek stock exchange. Are companies that combine innovation with resilience, traditional strength with new economy opportunities, and disciplined capital allocation with long-term capital investment that create long-term value for the shareholders.
Amazing. I think I keep from what you said something very, very important. You deployed 70% of the capital you raised. That's not really very frequent, even in international markets. Because you read a prospectus and then you think the company is going to do miracles, and then you invest, and then 2 years down the line, we are not there because the strategy has not been implemented fully. So I think that's a very important thing that you guys achieved. Mr. Rana, I'm going back to my previous question. Of course, you explained to us the methodology. I would appreciate if you could give us an insight to the implementation of such methodology for the reclassification of Greece from an emerging market to a developed market that you recently did.
Yeah, sure. Yes, so in October, following our assessment of Greece, it had been on the watch list for a year. As it met all the criteria required for a developed market, we were happy to announce that Greece will be reclassified to developed market status from September 2026. So we provided 1 year notice to the market of this reclassification. In terms of impact, at the moment, Greece has 33 securities within our emerging global index. When it moves to developed, it's projected at the moment to have 27 stocks. So 6 of the smaller stocks will not meet the size requirement. So if I can just maybe dive into that with a bit more detail. So at the moment, Greece is a medium-sized fish in a medium-sized pond in our emerging index. So our construction of our emerging index is based on a regional basis. So Greek stocks are being compared with other emerging European stocks. So they're being compared with Czech Republic, Hungary, Turkey, Romania, and Iceland. So as a result of that, there are significantly larger positions for those Greek stocks, and hence 33 are available or eligible for our emerging index. When it moves to developed market status, it will be in a larger pond compared with larger fish. So it'll be compared with UK companies, German companies, French companies, Spanish companies, etc. So the way our construction is that you rank the companies by full market cap, and then you do cut-off levels. So as a result of that, you're only at the moment seeing 27 projected to be added. That projection is based on data as of month end June 2025. Obviously, the numbers will change. So come September 2026, the eligible securities will be ranked on data as of end of June 2026. Also, we will provide an updated projection of the Greek stocks that will be eligible based on year-end data. So that will be published in March. So you would get an idea as to whether there's a change in those 27 stocks or not. In terms of the implementation and the impact on the Greek equity market, so we do not see a material change in the inflow or outflow of capital at the time of the reclassification. The reason behind that is that Greek has a larger weight in our emerging indices, but the emerging indices have slightly less assets tracking them. When it moves to developed, it's going to have a slightly smaller weight, but a significantly higher assets tracking those benchmarks. So it's kind of going to balance itself out initially. We may see slight increase in inflows on that particular date. However, longer term, it is extremely beneficial for Greece to be a developed market because developed assets under management grow a lot quicker than emerging assets under management. So over the years, once Greece is established as a developed market, you will see significant inflows coming into Greece. And obviously, FTSE is the first index provider to take that reclassification step. Then you're going to have other competitors like MSCI, S&P following suit as well. So in terms of further details, so we do have an FAQ available on our website that provides additional details on this reclassification. And then finally, I would like to touch on the kind of points that my colleagues have made on this panel and also on the previous panel. So this reclassification is a notable turnaround for the Greek equity market, especially after the major index providers had downgraded it to emerging market status. Month end of November of this year, the Greek index is up 70%. It's one of the best performing country level indices in our global benchmark. Over the last 5 years, from 2020 to date now, the Greek index is up 200%. Again, one of the best performing country level indices that we have. So this is a natural step for Greece to move from emerging to developed market status due to the economic stability that's been kind of embedded into the market since the downgrade 10 years ago.
That's great, thank you very much, and I think that's only good news, the reclassification. I appreciate there is also some consistencies between the work you guys do and other, let's say, agencies are doing, or other actually surveyors. And I was reading The Economist, report today that actually does indeed describe the very same picture about the Greek economy. We might not be the champion this year, we cannot be the champion every year, but we are one of these front runners where exactly the story you were telling about, gradually climbing that ladder of European economies and becoming more reliable and more successful. I think that's something that's really, really positive. Mr. Nikas, I would like you to briefly touch upon something that we did not discuss that much today. I'm sure it's going to be discussed in other panels as well. Everybody saw the Euronext Athens transaction. Maybe you can share some of your views on how the integration is going to go, whether it's going to go well, what are the challenges there, and obviously what such integration, if achieved, is going to offer to the Greek and international market participants in the Athens Stock Exchange.
Sure. The integration of the Athens Stock Exchange into Euronext, after almost 150 years of independent operation, is arguably one of the most significant milestones in the history of the Greek capital market. And it is a development with implications across the entire Greek financial ecosystem: the economy, the investors, the listed companies, the intermediaries, and of course the market infrastructure itself. First, joining Euronext aligns Greece with Europe's largest capital market hubs. It broadens the access of Greek corporates, of the Greek companies, to international investment capital and strengthens their ability to raise funds. This is especially important because the European policy debate is centered around capital markets union and the need for European companies to rely more on markets and less on banks for their financing needs. Euronext has also a strong track record of improving the markets it has integrated, improving through higher volumes and more efficient technology. The Greek market will essentially join a common Euronext liquidity pool that trades around 12 billion euros a day. If you remember, the Greek market trades 200 million a day. In practical terms, this means deeper order books, tighter bid-offer spreads, and much better execution. On the post-trade side, there are also benefits. The consolidation of clearing and the possible convergence of the Athens CSD to one framework could lead to significant cost efficiencies and lower operational complexity, especially for foreign investors. For domestic investors, integration opens access to a broader set of products and a harmonized European marketplace. For international investors, Greece will no longer be perceived as a peripheral market, but as part of one of the largest trading platforms in the world. This, again, can lead to more efficient valuations and strengthen the company's ability to raise capital. For SMEs in particular, the opportunity is even greater. Euronext already operates several programs, structured programs designed to help smaller companies prepare for capital markets, improve governance, and ultimately fund their own growth. In markets like Ireland, Portugal, and France, these programs have really made a difference. For intermediaries, the Greek brokers, the next phase brings both opportunity and challenge. On the one hand, they gain access to a unified European marketplace, much more liquidity, but on the other hand, the competitive landscape will change significantly as international brokers and market makers will have easier access to Greek instruments. Local brokers will need to align their operating models with Euronext, and the transition will require significant technological and organizational investment. So in summary, the integration of Athens into Euronext is a strategic upgrade that positions Greece at the core of the European capital market developments. The transition is demanding. It requires operational readiness, investment, and a coordinated effort from all market participants. But if Greece manages both sides of this equation, the long-term impact can be transformative for the Greek capital market.
That's very interesting. Thank you very much, Mr. Nikas, for the thorough analysis. Going back to Mr. Kallimasias now, who told us the story about the successful IPO of the Athens International Airport, and I think, the airport is already looking at the future, is actually already working for the future, and you did a dividends distribution and reinvestment program for your investors, which was pivotal also for the Athens Stock Exchange and from a strategic perspective. The question I got for you is, how was this perceived by your shareholders, and whether, especially in your role as a new managing director, expect to actually come up and put together such programs and such incentives for your investors in the near future?
Yes, thank you. As I said earlier, the IPO of Athens was not, the proceeds from the IPO were not for the investments of the company, but it was a sellout from the HRADF. But as you probably know, we have a significant investment program to expand our facilities. And we conceived this, we developed this scrip dividend reinvestment program in order to allow the investors, the equity investors, to participate in this, in the funding of this program, but also to enjoy significant returns, since based on our regulation, the equity increase coming from this dividend reinvestment program is eligible for a 15% after-tax return every year. So this has been pivotal, as you said, for the company and for the stock performance as well. This enables the shareholders to achieve this additional value, and enables also the company to support the funding of the very important investment program. The program has been received extremely positively by the equity investors. Approximately 90% of our shareholders participated in the scheme. It was a voluntary scrip program, but approximately 90% of the investors participated, and we expect, because this is a 4-year program, we expect over the next 3 years that this acceptance will continue, maybe even higher in the near future. So these are the kind of strategy initiatives that can generate additional value for shareholders, and we will continue to develop such initiatives in the future.
Amazing. Thank you very much, Mr. Kallimasias. I think that 90% participation, you talked me about investors' trust. That's amazing, and congratulations on that. So with this and that, seeing that there is not much time left, actually there is no time left, I would like to thank you very much for attending our session. Obviously 40 minutes are not enough to tell the full equity story about Greece in the near future. Nevertheless, we all had the privilege to listen to some of the most, let's say, sophisticated and active market participants, decision makers, and I hope you enjoyed that as much as I did. Thank you very much.